Hello everyone, and I hope everyone is well. So welcome back to another video here with Financial Hub. And today's video, I want us to do a market breakdown. It's November, the second last month before the year ends, and a few things have been happening in the markets the last quarter of the year, and we're seeing a lot of things happening this first week of November. Cryptos are down, stocks are down, indices are down, futures markets are down. It's quite a bear market on the streets for the first 2 days of this month. So I want us to look at that, break down the markets here and there, and then plan for the week ahead, or rather for the month ahead. That's what I want us to do, or rather for you guys to plan yourself. I have some opportunities that are building up on the indices that I trade, and I want us to look at that as well. But I'll also be looking at cryptos because I have a different perspective with what I said a couple of weeks, and that's the mind of a trader. When the facts change, also you change your mind. Don't be too fixated or married to a certain opinion. Markets are quite bearish. They've broken certain structures to the downside, and I believe markets could continue pulling back further down. So I don't have any trade running. All my Ethereum trades, if you remember in a few videos last week, I was posting about having an Ethereum trade, but right now I'm sort of sitting on cash, don't have any trade running, looking for those opportunities on the indices. But I also want to pay attention to a couple of things which we'll look at technically, because markets have hit quite some high prices with my indicators and my patterns. At those levels, we want to look at that. So I'll break down and look at gold as well, because gold sort of started this bear trend a couple of is it about 2 weeks ago. We look at that because that's what started it, and market capped at all-time highs and started pulling back, and sort of the rest of the markets are sort of following in that trend as well. Digital gold, which is BTC, also following through, and we're seeing that with the other indices as well. So this video is proudly brought to you by Paperstone, your official and trusted broker. So if you do not have an account with Paperstone and you want to start trading with them, they're a trusted broker. You can use the links below. And one last thing, if you remember in my previous videos last week, and I hope you go to watch those videos where I was talking about the series of gold and how money has evolved since barter trade all the way to digital currencies right now. And in that video, I mentioned, and I'm also mentioning here, that Ken and I are having one last, as Financial Hub, we're having one last class that will ever teach, not this year, no, not this year. It will be the last class that will ever teach ever. We are done with the education space, and therefore if you want to book your seat on that one, the link is below for our students who have already been with us, or for new students, while we also teaching everyone, past students and all that. So our past students will get a discounted offer, because in this content, or in this last class we're going to have, we're going to give you access to more things. We've never taught about cryptocurrency. In this class we're going to teach about cryptocurrency. We've never really given our prop firm course. In this course we're going to give our prop firm course for the same price that we've been charging, and also we're going to look at Forex, indices, commodities, and all those things that we trade, our new updated strategies, because many of you don't understand, but also I've not talked about it much, because you can see recently I use a lot of pivot points, I use a lot of moving averages, Fibonacci, and what have you, to get an understanding of the market. So those are upgraded ways of trading that I'm going to teach, and Ken is also going to teach his and show you a look of how we've been progressing in the trading space. So that's the last class. Is going to happen. It's going to start in the next 2 weeks. So make sure to book your class, book your seat, so that you can be one of the people who gets access to that. So everything is below. Contact us in our WhatsApp number, and we'll get into everything. So let's get into the markets. Now let's start. This is BTC. So this is just a technical range, or rather technical view of what is happening on BTC on a daily chart. So let's start with cryptos, then I can come to the trading pairs that I trade, the trading gold and the indices, and then maybe I can look at maybe one or two currencies, because there's a student of mine who was asking me about a few questions about some currencies, and maybe I can give you an overall view of how I'm looking at it. Look at the major currencies, maybe Euro USD and GBP USD, and then leave it there. So BTC, what basically happens in BTC is happening in the other markets. So I won't really go and break down. I'll also look at Ethereum, but I won't go to Solana, XRP, and all those BND because markets are basically doing the same thing. So there's this pattern that many people have been looking at, and I've been seeing it on the online community, where markets people are looking at this sort of overextended resistance level on the upper side, the inclining resistance level. So you can see this was a first touch here, we got a touch here where market sort of created like a double top, which markets tried to tap that level 2 times, and then markets had a very big correction, and it was sort of, and if you notice something, these were all market tops. Okay, this was December 2017. This was around 2021, before markets crashed from 68,000 all the way to around 16,000, 15,000 thereabout. And now this is another level that people are also watching at the same time, and you can see sort of similar pattern to what happened here. Okay, markets came up, touched this level. So if you squeeze fast, so this was the resistance at first, like this. Okay, this was the resistance at first, still maintaining those levels. You can see this touch here, touch here, touch here. Okay, markets go to 100,000, about 108,000, 109, then crashed all the way to 75,000, and 75,000 acted as a good support level, where markets then again pushed to 120, $125,000. That's an extra $50,000 to the upside. And if you overextend this, okay, so this is what normally happens. Normally you have to update your lines, your key levels, and all that. So as markets came further, if you overextend, you can see market sort of broke above. But if you just readjust over here, you can see that still respecting these levels, you can see that market has doubled up this level yet again, and we're sort of, let me lock in that, and we're sort of seeing markets coming back down. Now, I shared this with the private students before, and I think I'll do more in the course that we're going to have. In this last course, I'm going to show more deeper, in-depth data wise of how I look at this data. Now, you see these levels of my flags. I have these are not flag patterns, these are just, I flagged them. It's just a level that I'm looking at. There's normally a pattern that normally happens because it tends to act as a dynamic support. This is on the weekly chart. Okay, now I'm looking at a big picture Bitcoin, because Bitcoin, looking at it on a 1 hour time frame, 4 hour, it's really low. So over here, I normally start on a bigger time frame, which is the weekly chart. So you're seeing that support level, you're seeing that support level, and that support level. Okay, look at this support level before. So on the 50 MA, market tends to normally get some support level here. Okay, and sort of market is pulling towards that level. Now the question is, this time, is it just a pullback, or markets are going to go further than that? Because certain dynamic supports, certain static supports or resistant levels, key levels, tend to be broken from time to time. So it's not always respected, because it's been respected 3 times, it's going to be respected the 4th, it's going to be respected the 5th. So it's always about putting into perspective where we are. Now this time you have to put into perspective that market has jumped from this level, okay, or rather bounced off this level already multiple times. Okay, and markets one way or another, just like what happened here. You can see here we sort of had that similar scenario where market came, tried to bounce off this level yet again, but markets were unable, and it broke further below. So looking at the scenario of what markets are doing, the question could be, are we at a top where markets is going to have a very significant correction at the moment, or are we just having a basic correction? That is the main question. Now, I may not know the future, I don't know what is going to happen, but I can plan myself accordingly. Okay, so I'm not here to call a top, but I was doing some backtesting data. Okay, and I was doing some backtest, and normally when I'm doing backtest, you can see this is BTC Market Watch backtest. I was using FXREPLay. If you haven't used backtesting, you can also use the link below to FXREPLay and get your first or your multiple 15% discounted price using the link below to do proper backtesting. Remember, backtesting is not always about going back and looking at how the chart was performing, but actually putting yourself in that date, that time, and looking at how markets behaved, sort of in a live simulation. So I was doing some BTC backtest, and I'll give this deeper data in the course. So make sure to come for the course, okay? But I was doing some backtest here, and I won't really share everything that I got. But the patterns that I accumulated for the past 7 or so years are sort of a similar pattern that calls for a top where Bitcoin currently is at, okay? Sort of I'll explain deeper in the course. I don't want to give that data. It was I took some time to get that data. Okay, markets are sort of in a scenario where we could be potentially getting a top. So this, I was looking at the moving averages, looking at that pattern. If you come on and look at now here, markets have been strongly in an uptrend, like since we bottomed here at 2022. 2023 was basically a bullish market. In 2024, market started with a bullish trend and then sort of consolidated from March all the way to October before we got this actual rally. Okay, in November, the first week of November, when Trump became president. You remember, this time was a important time because of uncertainty, different promises here by the government. So people were really waiting to see who is going to win the elections. And when we got the election winner as Trump, who was advocating a lot for cryptocurrency and blockchain technology, we saw that rally come. And then we got some correction as the year started, and then markets really there was a lot of uncertainty, if you remember the start of this year, and that's why it's important to follow data, and that's why I keep marking. If you can't remember them, you can always write them down so that you remember history. During these times when the markets were having a lot of uncertainty with the tariffs that Trump was bringing into the economy, or rather into the global world stage. Okay, we got those uncertainties where markets were sort of rallying up and down. We got that big correction all the way from 108,000, markets bottomed at 75,000. Technically, it was still a good pattern. Okay, markets were still forming a good pattern. There was sort of a pattern that formed there. Okay, markets came and retested the previous resistance level and support, and from April we saw markets bouncing back to create an all-time high. However, the market volume or the market momentum is sort of fading off. It is not as strong as it was before. Now remember, and I keep telling you guys this a lot when it comes to technicals, as much as we're looking for previous key levels, previous resistance, it's always important to pay attention to how does market break those levels. Okay, for example, you can see as market rallied here to create an all-time high here at about 73,000 after coming off this previous top. Okay, so market slightly broke above, okay, to tap 73,000 thereabout. Okay, then we got a big correction. Okay, markets corrected, sort of corrected, consolidated. It was a big correction. Okay, markets got a 38.2 Fibonacci correction, and markets then rallied again. And this was my point. When markets are breaking certain key levels, you want to see how does the market break. Remember, technical also always answers when and how. When did market turn? When did market start going up? Fundamentals cannot answer that. That is always on technicals. And how is the markets moving in an uptrend? How are we breaking the previous support? How are we breaking the previous resistance? Now, this was a resistance. How was it broken and when was it broken? The first week of November when Trump became president. Now, that's fundamental news. But fundamentally, you can't see that. You have to look at it technically. When Trump became president, or rather won the elections, we had a strong bullish rally where Bitcoin was able to break. It acted as a catalyst to break the previous high. And we had that follow through, a successful follow through, where markets then broke a previous resistance. You can see that strongly, and it continued with the successful follow through. Then we got a normal correction, and then markets came back up. However, now coming back into this level, you're seeing market is not having that much of a momentum. We had it because you can see here as markets broke the previous high, we did get a good break, okay, but it wasn't a successful follow through. The break was quite legit and quite good, but immediately markets broke that level, sort of like a liquidity grab. Markets started coming out. People took profits and markets had that correction. Not for a long time, about 3 or 4 weeks, and then markets then rallied again. We've had that good rally, but that momentum is sort of fading off. Okay, so you have to look at things quite deeply. Okay, step by step. We had that rally, but it didn't really go far compared to where we had the previous high. Okay, you can see here the previous high, markets had a very good rally past that level. Okay, and currently over here, market has not had that much of a rally into a new high. Okay, if you get my point, it didn't really rally that much. It sort of got a consolidation, and then we started correcting back. You can see here we got a resistance, markets came back, then up, then we came back down. Now let's break it further down into, that's the weekly chart. Now going into now, and you can look at now all those things coming together. You can see that resistance line that I have. You can see that pattern, the price action pattern on the daily, on the weekly chart. You can see what I've shown you, where market is failing to create strong highs. Okay, and now coming into the daily chart, Okay, coming into the daily chart, let's also come here. I need to focus on this daily chart because I want to pay attention to the moving averages as well. If you come to the daily chart on BTC, you can see how market has sort of broken these levels. Okay, we have these resistance levels, markets are breaking to the downside, so we're not getting strong impulsive, like this impulsive move immediately creates a high, immediately it follows by another correction. You can see it started around here, markets create a high, goes down, creates a slightly new high, goes down. Now we're getting another high, and markets have sort of gone down. Now many people will look at it with a different perspective. Technicals is very much perspective oriented, it's sort of personal, and many people look at it differently. There's someone who else will come and say this is sort of an expanding excuse me, this is sort of an expanding triangle where market is expanding here, expanding to the downside, sort of support. But technicals are very much, it's very personal. Okay, now I'm looking to see now market broke below the main moving, the 50 AMA. Okay, here you had those resistance. Now market is coming for the 200 MA. The question is, will it act as support? If you look at it previously, the 200 MA, in accordance to the weekly chart, also market acted as a support here, acted as a support here, and acted as a support here on the 200 moving average. Okay, so we had that first one, we had that second one, we had that third one, where market immediately touched it and returned to the upside. So all the time market came and touched it here or here, it was a good signal to buy. Touching here was a good signal to buy. Now the question is, will this be a good signal to buy, where market is sort of, where that moving average is sort of dangling around the $100,000 mark, so 98, 100,000? Will that act as a good support? If you come here, it's sort of in line with Fibonacci levels, the pivot points S3, okay, around here. Will that act as a good dynamic support? Okay, that is the question to ask yourself. However, for me, if market starts breaking levels below the $100,000 mark, now that's still a support level that I'm waiting to see. If market starts closing successfully and closing below that level, because if you remember before, I did an analysis where I was saying this was a failed follow through, where markets broke below, immediately came back above, and was anticipating that rally. That rally was immediately killed, and markets have come down. Now, as you're breaking these levels, if market starts breaking below this level, then I'm expecting this markets to move further down to the downside. Okay, and potentially we might start entering bear market territory. However, markets to me, okay, let me go back to the weekly chart so that you can see it clearly. Okay, now let's just focus here. Okay, markets for me are not really in a bearish phase, okay, unless, or in a bear market, unless we are heavily below 75,000. $75,000 for me was the previous support level. Everything else in between here is sort of the normal corrections, okay, but my main correction is at the $75,000 mark, and markets dropping from 125 all the way to 75,000. That is still not a little drop. It's about a 40% drop. Okay, that's a 40% drop, and that's on Bitcoin only. If you look at other markets around, the altcoins and the others, the other markets tend to have more volatility on the upside and the downside in respects to what is happening on Bitcoin. So if Bitcoin is moving down, you'll find that Ethereum, Solana, XRP are moving down, but at a faster percentage rate, okay, to the downside, and sometimes also to the upside side. Okay, so for me, BTC is something to pay attention to. Okay, for those who have been holding their money, waiting for good opportunities, the opportunities will be there. The opportunities will come. So as markets are correcting, the opportunities will start presenting itself for you, not just to try and get a bottom, but to start doing dollar cost averaging, where you start allocating your money in certain intervals so that you can get sort of an average level of where you can get into the markets and start holding. Okay, so I'll give more information about the data I collected using my backtest and how we can further refine it and use it, but that will be specifically for the students who come for the course. So now I won't go into the other cryptos because I'll sort of just give an overview of what is happening. Okay, you can see Ethereum, I was strongly bullish when markets were still breaking above these levels, okay, trying to create new highs, okay, but markets were immediately caught, okay, immediately pushed back into the bearish territory and broke those key levels, which are support levels, back to the downside. Okay, so if you remember this pattern, I was quite bullish when markets were here. I had this buy here. I had a buy here where markets rallied all the way here and was stopped, sort of had a double top formation, and markets pushed further down. And then I got another entry down here. I actually got it around down here where I pushed market a little bit up, and now market sort of imekata kusonga. It refused to move further up. Okay, so to me it's coming out of correction phase into more of a trending phase to the downside. So if you get my point. Okay, so I'm watching certain levels. This level was broken. Okay, I'm watching this next immediate level here. Okay, around there, which is around the 50% correction. The 38.2 imekata kushikilia, so I'm watching other levels to the downside, but these markets are in bearish territory. If you look at this market so far, from its top it is down 30% already. Okay, so Ethereum is already down 30%. Bitcoin, on the other hand, is down from the top maybe 15 or something. Yes, around 17%. Like I said, the other markets move with more volatility, and if you look at markets like Solana, even much down from those highs up here. Okay, here you see it's about 40%. Okay, much more. Okay, and Solana as well, if you look at its pattern here, very much in bearish territory. I had a trend line here where I was anticipating maybe a flag pattern, a trend line bounce, as if markets were able to close above this key level, markets to push higher. But look, yesterday markets were red. If you look at the cryptocurrency heat map here, you can see how the markets are red, and this is just trading view. Okay, so if you don't know what the heat map is, just go and search trading view heat map. It will bring for you for cryptos. There's for stocks here. This is a stock heat map. You can see how in the stocks I'm normally looking, because these days we're heavily with Ken in the stock markets and looking at such. You're looking at electronic technology companies, all this that you're seeing here, technology services companies. Many people just say tech, but you can see how they've differentiated it here. Where you're looking at electronic, you're looking at technology. There's finance here. There's retail trade. Okay, it's the likes of Walmart and Amazon. So many people just call it tech, but it's not fully tech. You have to break it down. There's health technology, okay, producer manufacturing, consumer and durables, okay, consumer services, utilities, energy, minerals, process it. So basically these are the biggest technological companies, not technological, the different industries around the world that have the biggest companies currently in terms of market cap. And I'm normally looking at market cap. Here I have an account. So I normally look at it in different things. I normally want to look at market cap, earnings. You can do the same also with trading view. You can see here, you can come and look at large cap non-US. Okay, you can look at, I was looking at some certain income statements and balance sheets for certain companies of how they're making. For example, look at Nvidia, my friends, for those who do not know how big stock companies are. The revenue that they had in Q2 alone was about 165 billion. The profit was 71%. Revenue, no, this is growth. Okay, the gross profit was 100 billion. Nvidia. Apple, on the other hand, Q4, you're looking at this same 2025 fiscal period, end of the other quarter, $416 billion in revenue, my friends. Okay, that is revenue. That is crazy. Okay, their financial year, Sasa, you can see that 195 billion in profit. Okay, so gross profit actually. Okay, so those are things you want to be looking at when you come to remove operating expenses. You're looking at other things. Okay, so there's a lot on TradingView. Don't just use TradingView for market analysis. You can look at very many other things in here. Dividends, valuation, overview, performance, profitability. You can come and see companies that are most profitable and what percentage and all that. So this was broken, a useless line. Now markets, you can see here, markets are heavily below these certain levels. This market alone, can remove this as looking for correction. Useless right now. This market is down about 38% from the previous highs. Okay, you can see that markets are down that percentage. XRP, I won't go into the others. Okay, so you can see Bitcoin is sort of 20% down, and the others are sort of double that. Okay, because there's more volatility with the other altcoins as compared to Bitcoin, which is a little bit more stable in terms of volatility as compared to the others. So before we had these 25 million cryptocurrencies that exist, okay, before markets came here, and we have over 25 million cryptos that exist. Where is that? It's somewhere in a okay. It's somewhere, okay. Bitcoin used to have a lot of volatility to the upside and to the downside, very big swings, okay. I'm not saying that we don't have them now, we still have them, but it's not as much as they were before. So good. So let me end that as that. That's what my looking at crypto. We're sort of in that tangle of tug of war. Are we in a bullish market? Are we in a bearish market? I mean, are we ending the bullish market? Is it the beginning of a bearish market? That is the question to ask yourself when it comes to cryptocurrencies. And basically, look, markets have been rallying from 15,000 all the way to 120,000. That's, if you look at it on a bigger picture, that's a big move to the upside, okay. Let's come here. Where was it? Was it down here? I believe so. And markets had a 700% increase from that low, okay, from down here. You can see that from down here, from 15,000 to here, 700% increase, bro. Many people have more than 5x, 6x their money. If you had a $5 million, I mean, if you put $1 million, for example, hopefully you guys will get there. We'll get there one day where you can put $1 million into crypto. You've basically had about $6-7 million in profit. If you put $10 million, you have $70 million in profit. If you put $100 million, you have, just give or take, about $700 million in profit. And if you put 1 billion, the likes of Michael Saylor, who puts billions and billions and billions of dollars into Bitcoin every single week, you get an average of about, give or take, is made from $15,000, 1 billion to, that's about $7 billion in profit. If you put 10 billion, you have $70 billion in profits. And yeah, the people who are actually doing this, if you look at BlackRock, what they're doing, the investments, they've put over $60 billion in Bitcoin as they have created their ETF. If you look at Michael Saylor, he's put, there's the Michael Saylor, here, let me show you, Michael Saylor BTC tracker. Is it this one? You can see everything that he's buying and selling. I normally have it. Let me search for it. I'd saved it somewhere. Where is it? I think, let me prepare that for a different video, okay? Let me not get really into that right now at the moment. So, look, I'll show you his entries, where he buys, how he dollar cost averages, and all that. So, now, coming to gold, let's start on a monthly chart. It's a new month, so most of my analysis, I'm starting on a monthly chart, okay? Just to look at markets from how did October close, what are people expecting. If you look at the October monthly close for gold, we sort of had a very big shooting star that was formed, okay? So like I was saying, if you look at gold on a monthly chart, okay, if you see what happened, okay, we've not had such a big candlestick closure for a very long time on gold. And the last time we had that, we had some bearish momentum that followed. You can see sort of here as market was in a bullish phase, sort of here as market was in a bullish phase. The next month, markets followed with the next couple of months in a bearish trend, okay? And sort of the similar thing if you come further here, okay? You always want to look at history and how it behaved before. Sort of here, not that big, but sort of here, a little bit of a correction. Okay, but remember, at the same time, look guys, we sort of had this one here, but this one, Nimena Mbali, 1979, but we had a bearish phase after that. So we've not had such a top in a long time, especially after following this rally that market had, okay, and this many couple of months that had successful rise to the upside, okay. I'm not the type of person to call tops when it comes to things like gold and all that, because over time we've come to see that you can be wrong more times trying to catch a top than you can just trying to follow the trend. And at the same time, I don't mean follow the trend blindly. You can also use certain indicators that can show you when gold is at a certain point where you want to stop buying blindly, okay. If I come to if you've watched my couple of videos in the last couple of weeks, I've talked multiple of times where I'm not really trading gold at the moment because it's sort of trading at some levels that I'm not comfortable buying easily, as markets have been crazily having in a rally, and my indicators as well has been showing me that it's around those times that you really have to sit tight and wait for good opportunities to come. It's a hard thing to do for many traders, as people can't really sit down and wait for certain opportunities. They want, as markets are going up, they want to be in that trade. As markets are going down, they want to be in that trade. So you have to be really patient when it comes to that. So like I was saying, if you look at where gold, certain indicators for me, like I'm not a heavily gold buyer, especially after we start breaking R3s. Okay, like before here, and this was some time back, it was quite good to get some entries where market was trading below the R3 around P. It was very good to get entries 2024. But as the year started, since 2024, this gold market has been in a rally, coming to R3, breaking above, getting a little bit of consolidation, still at the R3 and going further above. So it's been quite hard for me to really trade these markets quite comfortably for the last couple of weeks and months because of those rallies. But at the same time, you also pay attention to other things, like if you look at this as well, gold still, you can still see that rally, creating, it's just trading. You can see here I don't have even multiple key levels because gold is just trading at all-time highs, sort of dangling in the air. There's no support, there's no resistance. Maybe using now psychological levels of supply and demand, the round numbers, quarter levels, and such stuff. So like I said, about 2 weeks ago, gold and ilianza correction, and sort of the other markets have sort of been following suit as well. I don't have any setup building up on this one. I don't have anything at all, but markets are just in a bearish market. You can see we had a strong rally for many days, and the markets have sort of had that correction. We've had a bit of a about 10% correction from all-time highs around 4,300, and the markets came down to about 3,800 level. Okay, so nothing for me much on gold in terms of execution, but I have others building on the indices. Okay, so indices over the weekend, last week, I remember markets opened over here with a sort of a gap. Okay, now I mentioned this and I mentioned before, when I normally say gaps tend to close, but at the time of closing, it cannot be determined by anyone. Okay, markets can close certain gaps. So for example, if you see this week over here, when I remember this, the week Trump tweeted, and markets dropped crazily, crypto markets, all markets, most markets, stock markets, then they recovered by Monday. This was on a Friday. Then Monday, you sort of had that open over here, and I did a video analysis on that one. If you go to our Financial Hub page, I did it, I think it's this one, if I'm not wrong, or this one, yes. Trump just crashed the markets. That one, I did an analysis on that one, so you can also check it out. I was talking about these gaps closing. So sort of markets sort of came a little bit close to close them, then we rallied. But what we got over last week, okay, markets opened here with a gap. Okay, this was last week on Monday. Markets opened, sort of did have that rally momentum to continue to the upside. Like I said, the markets are trading around R3. Those are levels I don't want to be looking to buy. Okay, markets are at a very important, crucial level on those sides. And this is the same on US 100, US 30. This is US 30 I'm looking at, but we saw the same on US 100. Okay, let me just show you here. We saw the same on US 100 where markets had a gap, sort of a rally, then we had a bit of a consolidation. So it was a failed follow through. Markets didn't continue. And today we are sort of seeing that reddish bearish candlestick today. We're looking at US 500, sort of the same thing where markets are that open. Then now we're sort of getting that bearish close. So as we're getting those bearish closes, markets are sort of forming certain patterns on all of them. If you look at US 30, there's sort of a corrective flag pattern that is coming as markets are going back to P. So you can see here markets are sort of dangling at the S3. Okay, and I said this is rare. When markets are in a sort of important bullish phase, it is rare to find markets coming down to the S3. It is rare, but when it happens, it also offers good buying opportunities. And I'll show you a little bit from here. So if you see here, market sort of corrected a little bit nearing the S3, and if you got this buy, it was a very good buy. Now if you look at the S3, markets did not come to the S3 again until this level where Trump tweeted and sort of markets crashed. Okay, so if you got a buying opportunity around these levels, below the S3, it was another good opportunity. So you're seeing this opportunity, markets bounced back up. This opportunity, markets bounced back up, and sort of now markets are dangling around that level. Many people are calling markets sort of in a bubble. Okay, so with the AI and everything happening around AI technology side, many people are calling markets being in a top or sort of stretched too thin. Like there's no valid reason or valid money that is supporting those levels. If you look at Warren Buffett, the all-time best investor to ever live, is currently sitting at $382 billion stock. I mean cash pile. Ameuza ma stocks, amekalia cash, because well, the markets and the market's behavior, right now it's sort of, it can be a little bit of those irrational exuberance where people are like, AI is the next big thing, AI is then going to change the world. It is going to change the world, just as the internet changed the world during the 1990s, but we still have to deal with economic realities where some things can be stretched too much. You're looking at Nvidia, which just crossed $5 trillion and currently right now is at 503. Okay, if you come here, you see here, or here, actually it's not even 503, 506, where markets are just at all-time highs and just keeps rallying and rallying and rallying. Okay, these are high levels. Okay, a 5 trillion market cap on Nvidia is almost 200 times or about 150 times bigger than the GDP of Kenya alone, because Kenya's GDP currently sits at $175 billion. Nvidia is worth 5 trillion, doing revenues in the hundreds of billions. Okay, so these markets are quite pricey. Okay, and that's why we're looking, potentially these markets could be having sort of a top sort of forming. Okay, it hasn't shown yet technically, okay, on the charts or here even looking at that, but where markets are, okay, sometimes you need to use your sixth sense. Okay, you're looking at how markets closed last week, you're seeing that top there. Looking at here, you're seeing that sort of resistance around there. You're looking at 500, that level over there. We could potentially get into a market where we are having some sort of correction coming into the markets, and I won't be surprised if markets can even correct all the way back to these levels. Okay, where you can have a bit of a, from the top, you can have markets correcting about 10-11% corrections to the downside. Okay, but still at the same time, if markets are able to get some support here, it's still a good opportunity to still buy. Okay, if markets can get, now here I've not taken this trade. Now when markets are sort of stretched too thin and getting to certain levels, you don't want to be very much in a rush to enter the market. You want to look at many variables coming together, coming into play. It's just Monday. I want to see today. Monday yesterday was a bearish market. Tuesday has been a bearish market. Will that be the same? And today is just Tuesday, the beginning of the markets. Will the markets continue to be bearish the rest of the day? Will it reject a certain level? Will it be unable to break a certain level to get opportunities? Will we get those pin bar formations? Will we start rejecting certain key levels and what have you? So those are things I'm paying attention today and tomorrow and Thursday, also Friday, depending on how markets is going to be. We can get some consolidation. Markets could strongly break below, okay, break and close below, and I'm paying attention to that, especially on the daily chart over here. If markets are able to break and close below this level, and I want to see how markets will react tomorrow after that break. Like I said, I always want to pay attention to the market follow through. After a certain break, what happened? You see here, when you had the bullish break, you got a little bit of a follow through, then market sort of consolidated and fell to the downside. You do not want to be bullish at such a time, especially as markets is trading around R3, you want to be stepping out of that market. Okay, so I have sort of the same similar opportunity building up on all my indices. So this is US 30. I have the same building up on US 100. Okay, so I'm sort of looking over here. Gap hasn't been filled yet. This gap hasn't closed yet. Looking to see if markets can still push further down to these levels and see how market is going to reject those levels or even break further from those levels to move further down. And US 500, I'm looking at the same thing. Okay, sort of, can markets come and retest this previous resistance? How is it going to retest there? Are we going to get a solid signal to get a buy entry? So those are things I'm looking at, and those are the opportunities I'm waiting for. Now, before I finish, maybe just looking at things like Euro USD. Okay, I don't trade this market, so I'm not really deeply invested. Remember, yesterday, not yesterday, today's Tuesday, the 4th, yesterday, Sunday, November, the day before yesterday, daylight saving time shift. So markets moved, the time moved. We have entered sort of into the summer, I mean the winter period, where the nights are longer than the days. So I tend to show you guys this every time it happens. We had the last ones in March, and now we're in November, where markets are then changing. So what does that mean? It means the market time opens are going to move 1 hour ahead. So London was opening at 10 a.m. It's now going to be 11 a.m. Markets are opening at 4:30 in the evening. New York open, now it's going to be 5:30, 1 hour ahead. Okay. For example, let me just give you a practical example. If you look here, last week we had some federal funds rate. Okay, they used to come out at 9 p.m. and it's been like that since March. So the time of that announcement to come out, where they lowered the interest rates by 25 basis points. Now if you look at the next time we're going to have that, I think it's here in December. Okay, let me show you the dates. Okay, this is December 10th. Okay, you can see now it's going to be 10 p.m. federal funds rate. Okay, it may change. It's going to move 1 hour ahead, as well as news from England and all those other countries. So time has changed, so you have to pay attention to that. So looking at things like Euro USD, I remember doing this analysis with a student of mine, where market has broken structure. Okay, so we had sort of a failed. Now leave this alone. We had a good support where market was creating some good supports around this level. Okay, the market sort of was breaking this support level. You can see we're always looking for levels where market supports and pushes to a new high. Now we got a support here, and if you extrapolate it further, you can get to see that's a resistance and support. Okay, you can see it was a support here and also acted here. So pushed up, came back down, sort of rejected that level. We were still in a bullish phase, but now markets have broken even further down, sort of entering into a bearish phase. Okay, as markets are failing to move further up. Okay, if you come here, if you look at the higher highs, higher lows, higher high, higher low, higher high, higher low, the higher high, like I said in the Bitcoin phase, is not really creating a strong new high. Those are sort of signals of markets coming to an end. If you look at here before, look at these strong impulses. Strong impulse in Archer, the previous high. Look at this strong impulse. It really goes. Look at this strong impulse. But sort of over here, we got sort of a weak impulse. And markets broke strongly. Immediately, we had a failed follow through. Markets came back in, rejected that level yet again, and failed to move even further. And it's just basic candlestick pattern formation. If I zoom in, look at that. Impulsive, failed follow through, markets fell back in, sort of continued to move down, tried to rally back up, rejected that level yet again over there. Okay, and then moved further down. Okay, so this was a confirmation that the bullish pressure was sort of coming to an end. Support level been broken. Another support level I'm looking at and paying attention to is this next one here. Okay, where if market breaks this level, then we're officially, in my point of view, because I can establish this as the previous higher low swing point, where markets got this was the lowest point it went before it created this new high. So as markets are coming down, already on the daily chart, you can see how markets are already forming lower low, lower high, lower low, lower high, lower low. Might get a bit of a correction, then move further down. Okay, and that's the same thing we're looking at with the GBP USD as well. Okay, if you go to GBP USD, actually for GBP USD, and I remember I was doing this analysis with my student, it's already broken structure. Okay, let me go to I think I draw it here on paper stone. Where did I do this? Wait, I think it's here. Oh no, there we go. Here, okay, where market sort of had a first break of structure, we failed to create a new high here. Okay, let's go to the daily chart. Sorry, this is the weekly. Okay, this is on GBP USD. Markets are creating higher high, higher low, higher high, higher low, higher high. The first break of structures when markets broke below this level. Okay, try to rally further up, failed to create a new high. Immediately we got that rejection. Markets have come back below, and now I'm very much in bearish territory and expect these markets to even move further down. Okay, as markets are changing direction. So if you are very long on GBP USD and all that, it's my point of view. Some corrections might come in. Okay, but it's very much in bearish territory in my books. Okay, very, very much. Structure changed, and that has changed. I don't trade these pairs because of certain reasons, and I've given that reasons multiple times, but this is basically bearish territory. If I look at the DXY as I finish, yeah, we can also start to see that market structure starting to go to the upside. we had a very good bearish rally. Okay, markets creating lower low, lower high, lower low, lower high, lower low, lower high. We sort of got a double bottom around here, failing to create a significant new low. Markets rejected that bottom quite strongly with that candlestick formation, and we're sort of going back up to break this level. Okay, you can see markets are sort of going back to break that level. Might have a bit of a correction. Okay, might have a bit of a correction after this point, or markets could strongly close above. Remember, I always say that this is a level, an important level. You want to see how candlestick is going to behave. Price action. Will you have a strong close and a successful follow through, or will you have a strong close and a failed follow through and market falls back in? Will markets reject this level, get a bit of a correction before it goes further up? So those are things you need to pay attention to. So allow me to end it there for today. Okay, I hope you've understood a couple of things that I've shared here and there, but that's basically what I'm watching. Those are the markets I'm looking at, and those are things that are building up. So I'll do another follow-up video next week to see how markets have rejected those levels, and just basically update you in the market analysis of what has happened in the market. So hope you've enjoyed that one, and have a good rest of your week.